Hi, this is Louis Fervin of the Louis Fervin Insurance Agency at AllState Company, and today what we're going to be talking about is life insurance. Now, life insurance is a vehicle that everyone needs, no matter what stage in your life that you actually are. It's not built just to protect your beneficiaries. Life insurance has become so much more than that. Structured properly, life insurance also can become a pension for yourself as well. Now, if you're in your early stages, you're very young, you're in your early 20s, prior to your 30s, life insurance is the cheapest it's ever going to be in your life. It's always crucial, and young people, it's very hard for them to contemplate a need for life insurance, but it becomes so valuable to you to have it early on in stages because you'll pay into something that will always last for the rest of your life if you have it structured right. So young people, take a look at life insurance. Plan early because it's crucial that you plan early in order to be successful. For my mid-range people, my bracket, if you're between 30 and 50 years old, think about this way. If something were to happen to you, what state do you really want to leave your family? Do you want them to run the risk of losing the home and everything that you worked hard for? Life insurance helps with that. Nobody expects to die within your 30s and 50s. You're a young person still. At least that's how we think of in our mind. We're still young. We still have a long way to go. But if a tragedy occurs, where do you want to leave the people behind? Do you want to leave them in good shape? Do you want them to remember you and say, hey, they may be gone, but they're still taking care of me? That's what life insurance really means at that point. And for my older clients, I know you're thinking it's just too expensive at this point. There's just no way I could afford it. And to be quite honest, when you reach a certain age, the body just starts falling apart one way or the other. So it's expected that something's going on. You probably still can get life insurance. In fact, I can guarantee that there's probably some type of policy that we could get for you. It's just a matter of finding the right price for you. We all know with permanent type life insurance, there's two parts to it. There's the death benefit portion and there's the cash value portion. Now, we all know the death benefit portion is there for your beneficiaries. There's also a cash value portion in there as well. That cash value portion in there becomes, in a sense, your future pension. Because let's say, for example, you bought a $250,000 life insurance policy. Now, at the time when you bought it, you had young kids, so you were thinking about their college education. You had a house and a mortgage. You would think about making sure that they're able to stay there, they're able to go to college, and they're going to be protected if, God forbid, something tragically was to happen to you. Well, those kids now have kids of their own. They're not your problem. They have their own responsibilities to deal with. You're now in your 70s and you're retired and you need $10,000 to buy a new car, boiler breaks, whatever the case may be. Where are you going to pull that $10,000 from? Well, you do have this $250,000 life insurance policy, which has a cash value in there of, let's call it $80,000 at this point. Okay, you take out $10,000, tax-free by the way, so your uncle doesn't get a piece of it, nobody gets a piece of it except you. You take out the $10,000 that you need, and let's say you reduce your $250,000 to, let's call it $230,000. I think your beneficiaries better be happy that they're receiving $230,000 or you're going to come back and haunt them. But bottom line is that $10,000 need that you have is being taken care of. Today we're here to talk about retirement. Now, everybody at some point plans to retire. The goal is, how are you going to retire? Are you going to retire comfortably, or is your retirement package saying, welcome to Walmart and would you like fries with your burgers? Nobody plans on that, but if you don't plan for retirement, that could be what your future holds for you. Retirement is not complicated as people think. It's just a matter of putting a plan together and watching that plan unfold. Now, you could go conservative and you could go risky, although I don't advise you to go very risky. It's just not worth it. Now, if you take a path of slow and steady, success will usually follow you at that path. Now, if you're young, it does not require you a lot of money to put away for retirement, because the younger you are, the time is on your side. Putting something small away is $50 a month, less than your cell phone. if you put that away into a simple mutual fund or a simple ETF, you'd be surprised how much compounding interest works in your favor. And you'll be surprised how much money you actually will have when you retire. Now, the reality is, if you wait till you're in your 50s, then you're going to need to put a larger amount away because time is not on your hand. Now you're going to need to put a large sum amount of money away because it does take money to retire, and you don't need 5 different funds and 7 different strategies. You really don't need anything like that. As you grow, you could diversify a little bit more, but really pick one good fund or follow an index. Keep it simple and follow an index, and let the money grow for you and work for you over a period of time. Make sure you're putting money away into your retirement plan within your company. If they provide a 401k, a 403b, some TSA, if you're a government employee, whatever they provide, make sure you're contributing to that. If you're older and you're getting closer to retirement, there are a lot of vehicles out there that can protect your money. Even if you have money in your 401k or whatever retirement plan you have at that time, there's a lot of options that are available to you to protect that money against downsides of the market. There's what's called in-service withdrawals, where you can take a portion of your retirement plan at your company and roll that over into some type of annuity and have that money protected. So all those gains that you've made over those years will actually be protected. So you have a portion of your money that's protected, and every year you can take a percentage and protect that money. So there are a lot of strategies, a lot of things that are available for you to help you reach your retirement goals.